Good morning, Paul Georgie from Allendale. It's June 27th, Wednesday morning, and the focus again is weather, whether or not we're going to get any rain. The models, the European model versus the U.S. GFS model, are differing on the amount of rain that is potential through the Midwest here from the 4th through the 11th of July. The GFS model continues to put a lot of rain into that forecast for most of the Midwest. However, the European model, which has been the most followed lately, does not have that much moisture in it, at least as of yet. Meteorologists that we listen to have kind of downgraded the GFS model as well. They don't see where this rain and moisture is coming from because of the extreme dry conditions that we have in the Midwest. So that's certainly a focus and certainly a reason for the futures market to continue to have support underneath it. However, we've got other developments here. We've got some economic news coming out here in today through Friday. We've got the USDA planted acreage report coming out on Friday. We've got quarterly stocks on Friday. So those are going to be major influences to the market, where history says we can have limit moves either way out of these after this report. So be prepared to that. We also are coming up on the end of the month, end of the quarter, and the CME yesterday afternoon raised the margin requirement on corn, soybeans, wheat, and most agricultural commodities because of the extreme volatility that we're seeing there. So what does that do? That puts pressure on the margin clerks at the FCMs to try to get their margin calls and positions under control by the end of the month, because that's when the books are evened up. So we're going to probably see some more arm twisting here to get the margin requirement covered or get out, and that could be what we're seeing this morning already, is seeing some pressure in liquidating the short positions in the market. So that's one side that's also helping support this market here this morning. The weather certainly is another factor. The concern over this USDA report will continue to be supportive as we go into the Friday action. For those of you trading options, the volatility in options is extremely high as we go into this report, and from a historical basis, most of the time the volatility in grain options especially peak around this USDA report. So if you're buying options, you got to realize that you're paying more than normal for that right to be long the market during this volatile time. The basis here in the U.S. for corn continues to erode. The export business and export lineups are very small right now. We've got Brazilian corn trading at about $30 a ton cheaper than U.S. corn. So it doesn't make us very competitive, and as we see the U.S. futures strengthen, it even makes it more less competitive. So we struggle there from the demand side. However, everything is focused on the supply side right now, and certainly has got the right to, as we will see some extreme heat move into the Midwest here the next 24 to 48 hours. And will certainly stress these crops that need moisture terribly. So that should be enough to keep us volatile here today. In the livestock trade, the cattle cutout values were higher yesterday. Choice up 131, select up 19. Pork cutout values were lower, however. It's the first time we've seen lower and to sharply lower, down to $1.83 in pork in several weeks. It might be giving us the indication that we are seeing our seasonal peak in here for the hog market. A lot of times we do see a seasonal peak around this 1st of July time frame. So stay tuned there. Monitor Allendale's research, because we are extremely oversold as well, even though we have sold off a bit here in the last few days in the pork complex. We thank everybody for joining us last night on the Allendale Ag Leaders webinar. We had a very good crowd last night, a lot of good questions. We hope that Rich Nelson and Drew Lerner answered your questions. If you have any more questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I will talk to you tomorrow morning.